The tax rules for freelancers just changed significantly. The One Big Beautiful Bill Act passed, and it includes several provisions that directly affect anyone who's self-employed. Some of these changes will save you money. Others could cost you if you're not prepared. In the next 8 minutes, I'm going to break down 5 key tax changes every freelancer needs to know for 2026, including a new deduction worth up to $25,000 and a reporting change that could trigger more IRS scrutiny. Note: this information applies to US-based freelancers and self-employed individuals. Welcome to the Freelancer's Wealth Blueprint, where we turn complex financial concepts into clear action steps for freelancers and gig workers. If that sounds helpful, hit subscribe. We drop new videos every week. Let's get into these changes. Change number 1. The QBI deduction is now permanent. This is huge. The Qualified Business Income deduction lets freelancers deduct up to 20% of their qualified business income. This was set to expire, but the new law makes it permanent. Here's what that means in dollars. If you earn $100,000 in freelance income, you can deduct $20,000 before calculating your taxes. At a 24% tax bracket, that's $4,800 in tax savings every year. But here's the catch. The proof requirements are increasing. The IRS is getting stricter about documentation. You'll need clear records showing your income qualifies for this deduction. Sloppy bookkeeping that might have slid by before could get your deduction denied. My advice: if you're not already tracking your business income separately from personal income, start now. Separate bank accounts, clear invoices, organized records. Change number 2. The 1099K reporting threshold changed. This one affects anyone who receives payments through platforms like PayPal, Venmo, Stripe, or any third-party payment processor. Here's what happened. The IRS originally wanted to lower the reporting threshold to just $600. That would have meant payment platforms report almost everything to the IRS. That rule kept getting delayed. Now, the threshold is set at $20,000 and 200 transactions, which is the old rule. But starting in 2026, it changes to $2,000 with no transaction minimum. What does this mean for you? If you receive more than $2,000 through any payment platform in 2026, that platform will send a 1099K to both you and the IRS. This doesn't change what you owe. You've always been required to report all income. But now the IRS will have more visibility into payments you receive. If you've been underreporting income, that's about to get a lot riskier. The smart move is to report everything accurately and keep records that match what the IRS will see on those 1099Ks. Change number 3. New tip income deduction. This is a brand new deduction starting in 2025 that many freelancers don't know about. If you earn tips as part of your work, you can now deduct up to $25,000 in qualified tip income. Now, you might think this doesn't apply to freelancers, but it can. If you're a freelance bartender, server, hairstylist, rideshare driver, delivery driver, or anyone who receives tips as part of your service, this deduction applies. There's also a new deduction for overtime pay up to $12,500. This one is trickier for freelancers since we don't technically earn overtime, but if you have a hybrid situation with some W-2 work, it could apply. The tip deduction alone could save someone earning tips over $1,500 in taxes annually. Check if your freelance work qualifies. Change number 4. New charitable deduction without itemizing. Here's a small but helpful change. Starting in 2026, you can deduct up to $1,000 in cash donations if you're single or $2,000 if married filing jointly without itemizing your deductions. Most freelancers take the standard deduction because it's usually higher than their itemized deductions. Previously, that meant you got no tax benefit from charitable giving unless you itemized. Now you can take the standard deduction and deduct your charitable contributions up to those limits. It's not a massive amount, but $1,000 at a 24% bracket saves you $240. Every bit helps. Keep your donation receipts. You'll need documentation to claim this. Change number 5. Higher tax brackets mean retirement planning matters more. Here's the change nobody's talking about. The tax brackets for 2026 are higher than they were under the previous rules. This means more of your income could be taxed at higher rates. But here's the silver lining for freelancers. Retirement contributions reduce your taxable income. With higher brackets, every dollar you put into a solo 401k or SEP IRA saves you more in taxes than before. Let me show you the math. If you're in the 24% bracket and contribute $20,000 to a solo 401k, you save $4,800 in taxes. If bracket changes push some of your income into the 32% bracket, that same $20,000 contribution saves you even more on the portion that would have been taxed at 32%. The bottom line? Retirement planning just became an even more powerful tax strategy for freelancers. Now let me give you an action plan. First, review your record keeping. The IRS is increasing documentation requirements. Make sure you have clear, organized records of all business income and expenses. Separate bank accounts are essential. Second, prepare for 1099-K reporting. If you receive payments through Venmo, PayPal, or similar platforms, know that amounts over $2,000 will be reported to the IRS starting in 2026. Make sure your tax reporting matches. Third, check if new deductions apply to you. Do you earn tips? Do you make charitable donations? These new deductions could save you money, but only if you claim them. Fourth, maximize retirement contributions. With higher tax brackets, the tax savings from solo 401k and SEP IRA contributions are even more valuable. If you're not maxing out these accounts, you're leaving money on the table. Fifth, consider working with a tax professional. These changes are significant. If your freelance income is substantial, a CPA who understands self-employment can help you navigate the new rules and potentially save thousands. Here's the honest truth about 2026 taxes. Most self-employed individuals will pay more in taxes unless they plan proactively. The freelancers who understand these changes and adjust their strategies will come out ahead. Those who ignore them will pay the price. The information is available. The tools exist. It's just a matter of taking action. That's the breakdown on 2026 tax changes for freelancers. If you found this helpful, hit subscribe for more freelance finance content. As always, this is educational content, not tax advice. Your situation is unique, so consult a qualified tax professional for personalized guidance. See you in the next one.